Mic check and screen share check, please. All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for August 30th, 2022. Start with the market 150. Yesterday, I just noticed how I was noticing even during the presentation how optimistic I was feeling. When I feel that way, I am even more meticulous about preparing the trade in the other direction. That's sort of the discipline of the 7 standard questions for framing. So there was yesterday's doji at the end of this run, and I was fully prepared for this move, and instead we get that move. And that was a straightforward move in some of our standard targets. Maybe the easiest day of this entire sell-off in terms of directionality. Maybe even easier than any of the days where market was moving up. So today was a straightforward, fell below yesterday's low out of a doji, and the collapse continued, moving back towards the 30-day low, made a new 10-day low, and PSAR flip, still a pretty reliable guide. And the slope of the RL 10 and 30 are pretty clear. So everything down. So it's good to acknowledge the bias, and that's what I mean there about when it takes out the low of the previous day. That sets up this entire move from really about that's about 402, maybe even, yeah, that's about 402 downward. And then it closed below the key price level of 400. So 30-day low is now in play. And if that breaks, 380's in play. This was that early move down. You know, this is all 30-minute charts. So when that broke right here, that next hour was everything you needed. And then the little recovery fails to even get through the dragon. Doesn't get through the dragon, but rolls over. There's another nice move. So there's 2 moves in the primary direction that were well over 1% that really supported the intraday trade nicely. Let's take a look at the market performance now, or sector performance, I should say. All right, here we have the S&P at 1.1%. Diamonds were a little better, only off 1%. Treasuries were the only positive index. It was above the cut line at plus 0.25. At 113, there's still plenty of room to the upside. Remember, that thing trades right now between 110 and 120. So if the midpoint is 115, and this is closing right at 113, there's still, 2 scoops to the upside with 115 at the midpoint as a near-term target. We'll see that trade today in the sniper trade. Emerging markets were worse, minus 1.1. The Russell was the worst index at minus 1.4. Let's take a look at the downside targets so we can be ready for more weakness tomorrow. So the S&P at minus 1.1. The first cluster here, consumer discretionary, Bitcoin and the VIX, minus 1.17. This still is a caution to the the potential for the upside. That's still there, and the fact that this that portfolio insurance is not being sold at a premium is a fact. Lumber 1.23, real estate 1.46. The next collection here: wheat and precious metals, clean energy, Mexico materials, Arc Genomics, the FANGs, and lithium, all from between minus 1.6 down to minus 2.1. Tesla in the middle here at minus 2.5 at 277. The next cluster of ETFs here in sectors: blended commodities, Brazil, energy, marijuana, and oil. So the symbols that showed strength yesterday got smashed today, and that's typical of the bear, and that is that the sector cycling punishes everybody. So this really is favoring the one-day moves to lock in the bird in the hand rather than two in the bush. That's why I am mostly an intraday trader right now. So this group, from minus 2.78 in blended commodities to minus 4% in oil, which had made a new 10-day high yesterday. Then that should be in red. Oil exploration minus 5%. Now, individual companies, here's all our metals. That whole sector just got slaughtered today, and that was the straightforwardest, by the numbers, smoothest trades you ever want to see. And when all of them are moving together and their controlling sector, materials, is lower than the S&P, that is a recipe for find the movers and exploit the liquidity. Devon Energy also had a bad day, minus 4%. We'll see that trade. So when the movers are moving, that's all we need to see. Your minimum indicator set and your dashboard has to allow you to find those moves early. All right, to the upside, the S&P baseline here at minus 1.1. Tech, staples, biotech between, all basically minus 1%. Global future of finance, minus 0.9. Then a cluster here of blockchain finance, the other lumber, Arc Innovation, agriculture, Ethereum, Aussie dollar, blended large caps. So that's all between minus 0.6 and minus 0.12. Uranium, slight bump. Simon Property Group, commercial real estate, slight bump. And then the only symbols really that were healthy at all today: Squarespace, 1.9, Coinbase, 1%, Robinhood, 1%. That's pretty thin gruel to feed the mob, to be honest. Microsoft and PayPal, the only two other individual targets that were better than the market, and those weren't very persuasive. So defensive plays for sure with finance and staples and a little bit of tech. But boy, that was today was a rude awakening to the bear once more. All right, let's go to the reports. All right, we'll start with the sniper trade of the day. This is SPY itself. Here's the here was the close yesterday. And this thing opened, couldn't even get through the PSAR. There's your R10 wiggle. And that's a collapsing dragon pattern all day. And there's your standard risk. Now the R10 in SPY is 80 cents if you consult the chart. I've been using a straight dollar just for rounding purposes, so just using a dollar, so it's pretty close to the R10. Your mileage may vary. What's that difference make? A 25% underperformance in position size. So if I'm risking $400 per trade and I'm using a dollar risk, I can have 400 shares. If I'm risking 80 cents, I could have 500 shares. So the same move, that decision costs 25% of the performance. So these things matter. You decide how much. After this little R10 wiggle, this was a natural place to put a second position. After this little wiggle was another natural place to put a second or third position. I didn't. I was just trading ones. So that's 1 unit of reward. That's about 1, 2, 3, 4, 5R on the first. That's 5. Here is a SSC. There's your standard risk box. That one anchors right to the bottom of the dragon. It doesn't even come down to the RL10. That's how steeply down that first move was. This one monkeyed around a little bit. I got out of it with a scratch. I took the COTA 2, got out of it with minus 0.5. That was enough to trigger the collapsing dragon to the downside, because there's the RL10. Collapsing dragon, standard risk. If you get out here, then you have to re-enter here on the collapsing dragon again. But I had a cushion of markets money, and I was in the direction of the trend, and that one returns an extra 1R. So that's about 6R minus the half, so that's about 5.5R for the SPY series. Check or hold. All right, dashboard number 1, bearish normal. Today's little bounce gave it just a little bit of juice. It didn't close as poorly as it might, but the longer term is starting to look weaker. Volatility is pointing down. The risk Z is warning risk off. That's pointing to the downside. Chevron, Coke, ExxonMobil in the min pains. Alcoa, 3M, Walgreens, Intel, Home Depot on the max pains. That's really all you need to know. If you needed more information, the NDX is showing you all of the big collapsing breakdowns today. Visa and Verizon and Walgreens. 3M getting smashed. Intel just can't get out of the hole. Look at that. Oh my goodness. Apple is suffering wildly. So doesn't look like there's much safety in this thing, other than to, when you're on a toboggan, hold on tight and ride that thing out. The ETF's not much better. Look at all the new collapses. Plenty of auto framers. Um, Treasuries was the only positive strength. Japan is an anomaly. Brazil, which was strong yesterday, gave back 3.5% today. We see the nice trade on that one. Energy, metals and mining, oil exploration. So no safe havens in the sectors. I mean, the pain and suffering is rotating everywhere. Auto framers just telling you everything is well below their 10-day high. That's how sharp this tactical selling has been. Pfizer and Merck are the only squeezes. Tesla is actually squeezier than the broader indexes were. The big directional move today was in Brazil among the four standards that we look at. Inside the snipers, starting to get some enraged Godzillas. 3M, we saw that one yesterday. It followed through. Big downward move today. All you need to know. Volatility's coming back in. Godzilla is waking up. Inside the tactical symbol set, Bacht, VIX, Bitcoin. We're down to one popcorn here. Lots of fence sitters, but most of these, if you take a look at the 10-day, all of these are pointing downward breakdowns. Boeing is one of the first ones to start showing an increase in volatility. MLM is another one. Among the most volatiles, 3M demands your attention. Freeport Moran, NSC, TDG. So all of these where the 1-day volatility is really starting to spike, that's the early movers. So I actually will watch DuPont here too, because his 0.85 is very close to being enraged, as is STX. But 3M really demands your attention. That's Godzilla territory right there. Auto framer statistics for you for the tactical symbol set, and then also for the sniper stats and the tactical symbols. Marijuana and Mexico. U.S. Steel with a big 1-day move. Alcoa, the big 1-day move. These are not surprising. Brazil, Latin America, the big 1-day moves. They have all been in play, and today was a big directional move in all of them. You got to find those movers. The NDX multi-time frame is really telling the story here. All the red. Very few things not suffering here. I mean, there's no joy anywhere except the energy has some residual strength, but everything else getting slaughtered. The bright reds are the ones that broke down to new lows in those time frames. And look how bad Intel is. Jiminy crickets. And Walgreens, just, can they be in business much longer? We talked about this one yesterday, that after that sell-off, this was the holding pattern, and then that was the critical state. Does it recover or does it fail? The first step is down. And it's just now getting back towards the long-term average slope of the 30 after a really positive up move, a remarkably strong up move. It's coming back to the norm. That's the least surprising move. This move back to here is also not very surprising. It's a bear market and prices going down. I can't believe it. All right, let's see where we are with the slope stats. So the RL30 is continuing to come back towards the 0 line. The 90 is right near a turning point, and it's starting to roll over. The 10 is at now an extreme down. It's at 3 sigma to the downside. So if ever there was a chance, here's the chance. This is the critical state right there at the edge of the river. Be ready tomorrow for fireworks. All right, let's look at some sniper trades. All right, here's treasuries. As the market is failing, treasuries are expanding. They move 1, 2, 3. Just take the standard risk, buy it. There's the risk box. That's 1. That's plus 2. This is the big rollover and the PSAR flip. Standard risk. 1, another 2. So there's 4 by not having a directional bias, but simply being prepared and following the trade and taking the moves with standard work. Plus 4 in treasuries. Caught a 2. Standard risk, -1. PSAR flip, standard risk. Just keep firing. That gets the +1 back. Caught a 2. Fractional gain. Caught a 2. +1. So that's about +5 on treasuries for the whole series. And, you know, they all look in here, they all look the same leaving the station, and that was basically a wash. So you get a fractional win, and then the 2 sharp moves right from the get-go. Prepared to respond. SPY, this is the one we just saw, so yeah, from the opening. This one is U.S. Steel. These are all on 3 minutes. So this was the close. Here's the open, sells off. 1 risk box off the high. The PSAR is failing. The market is failing. The metals are the worst. All that thing does is just fail. This little sideways pause didn't even make the RL10 flinch. There was just a tiny little wiggle. So second position here. Fails immediately. There was an opportunity for an additional one here. But this little recovery on 2 positions made me reluctant. I was really close to pulling the trigger to get out. When it started to fail again, all I did was just ride it and get paid on the 2 positions. So here is 1 unit of risk. 1, 2, 3, 4, 5. So plus 5 on the first one, plus 1 on the second one. So that's plus 6 on U.S. Steel right out the gate, right out of the gate. SSC reversal. I wouldn't, Gary. If you were ever going to put a double scoop on it, should be the first one. That's the one that pays off the most. The second position fails often enough that it is eating the gains of your first position, which was hard to put on. So I would never double up on that second position. Never. Your mileage may vary. Not telling you what to do, but I would never do that. If you were to go back over the last year of trades and maybe 1,000 examples, you've probably seen me re-enter a position with a double scoop maybe twice out of 1,000 trades. And that's only after I had like a really strong win on the first one, a quick exit, and then it re-entered right away, and I might put 2 as a way to get essentially the second position on, but only if I had like 4R in a way. So that's like 2 trades out of 1,000. So that's a functional description of never. All right, so SSC, scratch. This one is rolling over, so there's the PSAR flip. I put the standard risk on it, trading it short, because I think it's aligned with that first trend. It gets me 1, and I think that was it. The rest of the market was failing, but this had already failed and wasn't getting much worse, so it felt like that's all there was. All right, this is Alcoa, and this standard entry on the short side, it also failed immediately. There was the opportunity for that second position here. Notice that this one actually wiggled where U.S. Steel did not. U.S. Steel was just a flat fail. So if I don't put the second position on U.S. Steel, I'm not really tempted to put it on here either, because U.S. Steel was failing harder. But I felt like I had good diversity in the positions. And that one is a standard exit with the PSAR, and that's about probably 3. So there's 1 unit of risk, 1, 2, 3, and some change. Tried the PSAR flip with the SSC, scratched. Tried it again, scratched. It's like, okay, I got it. You're done. Finally, this is Brazil, 3 minutes. So Brazil was the big upward mover yesterday. It rolled over right from the open. Failed a risk box off the PSAR. Short. Cashed at the usual spot. It immediately failed, so re-entry. I'm sorry, this was actually a SSC. So I did a stop and reverse here. Took the 1R loss. I think I shorted that one. I let it roll over. And now I take the, this felt like the collapsing dragon. I was not in any hurry to put a second long effort on. After the first one paid off and everything was failing, and the first SSC failed, I was not interested in that signal at all. But I was interested in the collapsing dragon. Yeah. One, two, so +2. So this one was +1. This one was -1, so that's all scratches. So this one is +2 in Brazil. Check or hold? Yeah, see, Griff is talking about collecting data for collapsing dragons in the red zone. Yeah, when it breaks below previous day's low. Yeah, that's everything you want. That's why that's the number one pattern we want. Bear normal market. This thing is failing. Man, you want that one so much. You don't need to pick winners. You just need to ride losers. All right, let's look at the traders. Here's Tim. There wasn't much movement in the micro euro, but he got what was there, getting paid 4 times. Here's his first 1 hour loss, but gets paid and paid. Lots of micro gains. +1 out of that tight sideways channel. Coming out of that with +1 and a good win rate is ideal. He had a little bit of time here with the let's see, what is this? This is the S&P Index Futures 3-minute. The freigegeben for tradenview.com. He starts trading here. There's the collapsing dragon. Gets paid 2R. I think actually what he didn't feel comfortable taking the OR3 out of the short trade. That's why you should take it and follow the rules. And then off of this little collapse, that's where we can get short. So this +2 was +4 if we can learn to be uncomfortable. Remember, the MMRB is what's protecting you against danger. Remember, you're in a bear market, and this thing is collapsing further into the red zone. Here is, let's see. I'm trying to remember who this was. Stand by. Shahab. One of our Tharp super traders. He tries the SSC. Quick scratch, reverse short. He thought about second and third entries, which would have made this massive. Plays the SSC, quick reversal, gets paid. I love the exit, 2 quick scratches, and nets 1 for the day. But this is the one, dude, we're in a bear normal, and it's failing to new 10-day lows. I am not in such a hurry to play the long on this one. Remember what our market condition is. Constantine, this is the DAX on 5 minutes. Futures opens here. There's the shelf that collapses, standard risk. There's the PSAR flip, 5R. Right by the numbers. Pardon me. And this was the guiding chart. This is the 1 hour chart, and that's where his short was initiated. And that was the move down that gets him the 5R. And it consolidates right where it consolidates, which used to be resistance and is now support. Here's Eugene. So some span of control considerations here. This is Alcoa. That's the OR3. He waits for this, gets paid, gets paid, gets paid. So still 1.75, reasonable, measured, and in line with his trading plan. U.S. Steel. Yeah, the OR3 gets short right here for the, and that's where the 6R trade was. So scratch, scratch, scratch. Actually, a fractional win in there. OR3. This is Squarespace. He gets attracted by the great big run-up. When that is outside the Z3, we might want to scratch that. That probably happened pretty quick. You say bad trade without a good... I don't mind that one at all, although I'd like to see you get that instead. I don't think that's so bad. The re-entry trade was good. And it nets positive. I wouldn't beat yourself up on that. I thought that was reasonable. Especially with Squarespace, there's no compelling reason to believe in it. Woj gets 0.4 out of Devon. Probably gave back more than you wanted. Tesla gets this one, but Jiminy Crickets, stop going to those meetings. Oh, 1.5. That's a good day. More from Woj, 3.7 on the Aussie dollar. There's your combined Kata 2. Gets paid, good scratch, takes a break. Just in time to get the collapsing dragon short. Oh, we've had this conversation by going to meetings. So 3.7. Sum of all trades today, 5.7. We can live with that. Luke must have been in the same meeting with Woj, because there's some Kata 2s. So we don't want that. We want to work hard to get this for 1.3 and a workmanlike effort. You got what was available when you were around, so we got to like that. We just don't have to like meetings. My brother, let's see, click to open. Let's see what we got here. So this is CCJ. That's the Cameco Corp. That's that uranium and utilities. So he gets zero point 0.6 on the grind. Gets a COD of 2 for 2. 0.8 on that grind. 1.2 on that grind. 1.5 on that grind. You start adding that up. That's 2.8, 3.6, 4.6, 4.8, 6.3 on the grind. So that's how you grind a shiny, polished mirror. That's good work, bro. All right, I think that's everything. Yeah, that's everything for today. We'll get this published and posted, and things are looking really good on that creativity report project for Fletcher. We had a couple emails from some Fortune 50 companies today that were starting to sniff around what we're doing. They're going to be very interested in our Creativity 202 course, so I may end up getting into that business here in the near future. You should take it while you can. That would be my advice. All right, fellas, good work today. And, brother, I'm going to shoot this over to you if you want to run this thing. I got to teach early in the morning.